In this video, we're going to take a look at the US dollar, Canadian dollar exchange rate, why is it so popular, and how to trade it. Hello, I'm David Jones from Capital.com, and this is the latest in a series of videos where we look at popular markets. Today, we're going to take a look at the dollar, Canadian dollar exchange rate, look at why it's so popular, go through some of the things that drive this market, and place a trade with a stop loss so you can see how it all works. But first of all, let's have a quick catch up with the typical volatility. So we'll go on our platform, then I'll come back and talk a bit more about this currency pair. Let's take a quick look at the chart for dollar, Canadian dollar, and then we'll have a look at the currency pair in a bit more depth, come back to the chart, and I'll show you how to place a trade. But I've gone for a long-term view here, so this is why it's popular with longer-term and shorter-term traders. So from the lows in 2018, around about 122, so a dollar was buying 1.2 Canadian dollars. The market traded up to 136. So we saw a 1,400 point move, a move in excess of 10%. That's US dollar strength we're seeing there. So that's the really longer term view. Let's take a look at the short term as well to see why day traders like this market. So here we're looking at just the last couple of days, and the dollar Canadian dollar exchange rate has gone from about 130, 140, that sort of area, down as low as 130.65. So we've seen a move in excess of 70 points over sort of a less than 48-hour period. So it's clearly short-term volatility like this that traders really want in markets. What we're going to talk about now, some of the things that drive the Canadian dollar, how to trade it, then we're going to come back on the chart and place a trade. So dollar Canada is the exchange rate of the US dollar to the Canadian dollar. So if the market's trading at 1.3000, it means that one US dollar buys 1.3 Canadian dollars, the same as any other exchange rate. I think the Canadian dollar, similar I suppose in a way to the Australian dollar, it's a commodity driven currency. You know, the economy in Canada is quite dependent on things such as oil exports, natural gas, and even lumber. So if we see moves in these markets, they will have an impact usually on the Canadian dollar exchange rate as well. Like many other popular FX markets, it's widely traded, sees a lot of volume. It's reckoned to be around about the 5th or 6th most popular traded currency pair out there, so sees lots of volume in the market. And what that means as traders is that you have tight spreads, so the cost of buying and selling is relatively low compared to some other markets, and usually means it's pretty volatile. You know, we had a look on the charts, and even maybe over a couple of quiet days, we do still see some decent moves. So those are some of the reasons why it's a popular market. When it comes to trading dollar Canada, you trade with us, trade contracts for difference, CFDs. Now that may well be a term you're familiar with. There are two main things to be aware of when trading US using CFDs. You trade using leverage, so in effect you get more bang for your buck. Traders have been using leverage for decades, and it's where a small sum of money controls a much bigger financial position. So that's great when you're right on market direction, but of course if you're magnifying your profits, you're also magnifying your losses. So it's more important than ever to use risk controls such as stop losses, and we'll do that when we place a trade. The other benefit of trading using CFDs, you can trade markets in both directions. So if you think the dollar is going to gain against the Canadian dollar, you'd buy. But if you thought actually the dollar's going to fall and the Canadian dollar's going to rise, you can sell short, and it's having this flexibility that's very important when it comes to trading. But let's place a trade. Let's get back into it, go on the platform and place a trade so you can see how it all works. So we're back on the chart now. I flipped this over to an hourly chart. So each of these candles represents an hour's worth of trading. Let's say I wanted to place a trade, and I was going to speculate that maybe we're going to see the rate increase. You know, we saw it drop a few days ago down as low as 130.60. The market bounced back about 80 points. We're back down at these levels, so I'll take the view I think the market's going to go up. Let's place the trade. I'll go to the top right up here to buy, click on buy, and it opens up my dealing ticket. Let's say I'm going to put my stop loss below these lows, so somewhere the other side of 130.60. I'll choose 130.30. So let's put close at a loss. I'll click on that, and I'm going to choose 130.30. So my stop's in. What I can do now if I want to, I can reduce my size. At the moment, I'm trading 12,000. You can see it here in the size at the top. Let's say I don't want to take on that level of risk. I can trade a lot smaller. You can see I can trade from as low as 1,000. Let's do that. So let's set it up for 1,000 US dollar, Canadian dollar. My stop is in at 130.30. My risk is tiny. If I get stopped out, I'd lose £2.60 or something on this trade. We're ready to go. We'll click on buy. And you can see the confirmation has come there at the bottom left of the screen. Now, if I go to portfolio on the left-hand side, I've got quite a few trades running in here from before. If we click on portfolio, so here you can see all the trades that are running on my account from other videos that we've done in this series and other market commentary videos. Down here, right at the bottom, this is the latest one I just did, buying 1,000 US dollar, Canadian dollar. The trade was done at 130.72.7. The market's currently trading around about 130.70. My stop loss is in. My margin, I've got £26.49 tied up, and there is my running loss at the moment. So, of course, the stop loss will sit there. I can close the trade whenever the market's open. So if I change my mind, I can just click on close now and close that trade out. But we'll leave it running and see how it performs over the next few days. But trading this market, this volatility, it's as straightforward as that to put these risk management controls in place using stops. Of course, it's important to understand the trades we do in these videos, they aren't financial advice. They're just for educational purposes only, just to show you the mechanics of how trading on our platform works. That's it for this quick update on dollar, Canadian dollar. To find out more about the market and contracts for difference, just go to our website, Capital.com. To never miss out on the content we produce during the week, just make sure you're subscribed to the channel and click the alarm bell notification to get automatically notified whenever we upload new content. We'll wrap things up there. So from me, David Jones and Capital.com, good luck with your trading.